right, let's jump into things. It is 10:22 on 27th of March, so a couple more days left in this sort of trading month. But let's start off with DXY because this is playing out pretty much perfectly to plan. I mean, who had DXY squeezes a little bit higher on their bingo cards? Because look, this is what DXY does. I mean, we've seen this a number of times. I've been calling this the whole way through this little bottom, well, not the whole way through the bottom here, but certainly once we started to sort of shore up this kind of little range area here. This is on a daily, which is a higher time frame than I sort of typically do for these analysis because it's not always super applicable. But you can see here, obviously, as I said, they had the range. It's almost, you could call this a little bit of a double bottom as well, but basically I was trading it as a range. However, regardless of it all, it gives us our price target up around this 104.75, and this is what I've been sort of touting the whole sort of way, sort of moving up through here. And look, it's been profitable in that. Even just sort of last night, there was a lot of positions sort of set up, sort of looking like it was going to fail. And this is what I've been saying every day, whatever, every session, every one of these analysis through these points, is that this is what DXY does. It looks like it's about to fail, and then bang, it shoots up a couple more in that, and it'll do this time and time again, which is why I have this second sort of price target potentially, or sort of not necessarily price target, but second area in which I'm interested, up around this 105, 105, well, 105.20 to 105.40. This kind of area up here for a bit of a retest of that underside of that thing there, because it has, like, if you look at it, I don't do Elliott wave sort of stuff, but this is one leg, this is two legs, this is the start of the third. Then you've got a back and then you've got a fifth. So, if price target takes you to 104.75, well, you're pretty much right on that. And, RSI looks like it could have a little bit more in it. So I wouldn't be sort of jumping necessarily straight on the shorts to sort of counter this kind of move just because we clip into this. Like measured move price targets are basically levels in which you can, obviously take some profit, you can expect some reactions, and then reevaluate from there. I went to F1's a couple of weeks ago and sort of met a couple of trader guys there, and one of the guys there was sort of like asking me sort of like how do you sort of pick your targets, or sort of like you do your positions, are you doing percentage based, are you doing points based, and all this kind. Look, I'm trading the flow. Like, you know what I mean? I'm not looking at something and going, oh, look, I need to make X amount percent off this trade or anything like this. It doesn't work for me like that, because I think that sort of pigeonholes you into like, well, I said I'm going to make this percent. And I'm sure this works for some people, but particularly for FX and that, I've found with my experience that that's not the sort of way to do it. So I'll trade up till I see these price targets, hit these price targets, then I'll sort of clear the book, reevaluate and say, hey, look, are we going to go higher? Or is this thing about to sort of like, fumble a couple of times and then fall over? Because typically DXY as well won't fall in one go. It won't just go up and then straight back down. It'll come up, it'll bash into a level, it'll come back, it'll bash in, bash in, bash in, come down, do one skyrocket, and then it'll come down. Something more like this. This is what you can expect. Excuse me. This is what you can expect to see with a top on DXY. If you look back previous times, as I said, it didn't just come up here and fail. I mean, from this point it did, yes, but like it goes up, falls down. One last rocket up, bang, comes down. If we go back a little bit more history of these sort of bits through here, these kind of tops through here, doesn't hit one spot and it'll fail, comes down, goes up, comes down, technical, lower, one last, saving grace, move up, boom, up over here, bang, one up here, sideways, bang, one up here. So that's the kind of top that I'm sort of looking for, should we sort of start to roll over. Look, this isn't a full trend. I do believe this is more just a bounce in a trend. So I don't think this is going to be something that, we're going to see like, weeks long of sort of attempts to sort of get over. But if you sort of stand back and look through all the garbage that I've sort of drawn on the chart here, you can see that certainly this is within its reach to sort of, come up and retest some of these lows over here. So this 105.40, which is also the 50% retracement of this last leg, coming up over here. So this is obviously where we've got the wick lows. So let's just pop that just over there, just so we've got an idea of it all. But certainly 104.75 is the price target for the measured move of this sort of double bottom range, whatever you want to be calling it. It's the same thing down here. But should it sort of want to kick up a little bit more, I'm open to the idea of it going to 105.40. I don't trade sort of like DMAs or whatever they're called and these kind of things and that, but I think we had one on here, AMA 50. I think this is what a lot of people have been looking at as well. Though maybe it's this, what's this? This is the EMA. So I think there's a difference between DMA and EMA. But sort of EMA is sort of, where we go here. So this must be the 200, which is this red line coming through here, which actually comes in 105.40 as well. As you can see, it's all sort of leveling out here. So I'm starting to sort of think that, this 104.75 definitely is an area in that, to sort of chill out a little bit. But I could see this thing possibly moving up a little bit higher. I mean, we've got a little bit of a confluence of stuff here. We've got that previous wick, which is this purple line. Oops, let's make that a pinpoint. Oops. For some reason, it likes to disappear on these things. I think it's set to a certain time frame. So we've got this 200 EMA. There'll probably be some sort of correction as to why you use it and not the DMA or vice versa or whatever. But just as I'm sort of looking at this stuff now, you've got this all sort of coming into this level. You've got the 50% retracement of that move. You've got the previous wick lows. I think a lot of things say that, I mean, that candle there does not look like it's about to just go boom and do a big engulfing down to 103.78. Look, it could. Who knows? But yeah, we'll have to sort of wait and see how this sort of session plays out. We got PCE on Friday. Let's just have a look at the news just while we're doing this as well. Because it was pretty quiet. I think we had durable goods overnight. Slight little bit positive here, certainly down on what they was expecting on the orders, but not as far down, I suppose. Take that as a slight positive, and core up. So that's a little bit more of a sort of positive. So there's a couple of ticks in the USD sort of strength camp here. We also got 7 a.m. Trump was speaking again in an hour and a half time. This guy works hard. So yeah, look, overnight, not a great deal of data sort of coming out. Fairly sort of big jump, sort of big miss to the downside in oil. So I don't really sort of track oil that closely, but something to keep an eye on, see how that sort of reacted to the market. It's quite a big sort of miss there actually. So we would have expected probably a little bit of support in the price with such a big miss. But yeah, going through, we don't really have anything through. Well, we don't really have anything. We don't have anything through Asia again today. So it's been very quiet in the Asia sessions this week. Moving through tonight, we've got not really much through Euro as well. And I think GDP, that's the sort of the number that you're looking for in terms of the sort of bit of data that we're looking for through the session. 2.3% previous, 2.3% sort of expected or forecast. And yeah, we'll see how this goes. And look, again, it's one of these things. If it comes in, if GDP's up there, it's probably third tier data, I'd say. But if it comes in a bit positive, it comes in above this, well, signs are a little bit not as dire as possibly the market's been pricing and how people have been playing it, and that's what's going to feed into potentially another little squeeze up on the DXY and US dollar. So a little bit of strengthening into the end of the week. And then again, not really sort of much overnight, too much there. Just on the news front as well, we'll get back to it in a second because we had Aussie CPI yesterday, and this was a very interesting price action around this because 2.5% expected, 2.5% previous, came in at 2.4%. So this should be dollar negative. And the call I had on this was pretty much, if you go back and watch the video, it was pretty much like to the point, perfect. I didn't actually end up executing on it because I was like, look, this is coming down hard. We're going to go through it. This is great. Here we go. And of course, it did exactly as I kind of sort of thought it would be. But what I want to sort of unpack with the Aussie is the reason that it, well, not the reason, but like it was moving up and it bounced, I think, 50 points off the lows. And I sort of called a negative divergence on a small time frame in that sort of through a channel up at 63.30, and it was just pinpoint up the top there. So the price, like the analysis on Aussie at the moment is spot on. Just need to work on that execution a little bit because that was a 50-point bounce, and I just watched it from the sidelines. I caught the short both times. I caught the short down with the data, and also I caught the short from the negative divergence up the top. So yeah, I'll get to that when I sort of cover Aussie. But back onto DXY. So seeing things open up a little bit at the moment, are they? No, so 15 minutes or so. Look, I would say, given how this is sort of looking at the moment, we could expect maybe a little push down and then a flip and a push up there. So let's just move this along. Typical sort of thing, maybe put in a lower wick and then sort of go. Depends how many, like, because that's the thing. If we get down to a lower time frame, look at the games that they were playing with this thing. You know what I mean? It's like so down, down, up, rejected, rejected. Look, a number of times this stuff. I mean, look at this sort of sell down here the other day. And, you know, fights its way back, eventually bang, 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 and then bang, punches through. So punched through at 4 o'clock, which, you know, just looked at the news. It didn't really seem to be much at that time. So look, I think definitely we'll probably sort of see maybe they play a little bit of a game here and do it, but it's one of these things I find sort of with the price action when they've played games and games and games and sort of like, oh, it's going down, it's going dragging people, dragging people, dragging people, dragging people. Eventually they get to a point and they just step on the gas and they just go and just really jam it up. As I said, price target's very close now anyway, but you know what I mean? Like, there's people that are trying to short this thing, you know, obviously time and time again here. Well, a couple of times here they were doing okay. This time they're wrong. If they get the chance to get out, they're going to take it. So, do you let them get out? That's the question. Or do you just step on the gas and just really squeeze them hard? Because this is a squeeze move. This is what's happening with it. The market was so positioned, so heavily short. Given these sell downs, look at these things. These are massive sell downs, and there's a lot of strength short there. So, you know, there's people that are new shorts, new onto it, which were looking for, you know, this right move down here, which I am as well. But I'm, as I said, the whole way through here, expect a squeeze. This is what I've been saying. I title these things every day, and I sort of like trade that plan. You know, I break it down, of course, as to sort of why I think this, just so I'm not sort of giving myself a bit of sort of confirmation bias. Excuse me. But the point is, this squeeze I've been calling and sort of trading US dollar strength through here. So there's a point where they sort of go, okay, they're squeezing these new people into these things. You know, anybody that got on here, squeeze them. Anybody that's still holding on from down here, well, you know, good luck to you. You just got to ride this out. But the main thing I think with this kind of sort of move, with this whole squeeze, is because this is such a strong move down here. Yeah, apart from the fact we came into a whole bunch of support areas down here, close that election gap. Um, you know, people have been sitting on their short position just thinking how wonderful they are. You know, maybe they bought the break here, boom, boom, and they've just gone straight into profit. And they're just like, yep, set and forget. FX doesn't work like that. FX is not a set and forget kind of thing. So what they're trying to do here is really make these people sweat, really sort of get them to sort of go like, oh, geez, why I thought I could have just, you know, go away on holiday and forget about this kind of thing. But they're pushing it up and they're going, oh, my profits, they're all disappearing, they're disappearing. Or they've been trailing their stops down here and now they're just hunting them out and chopping them up, chopping them up, chopping them up. And once they're done doing that, then we can go on with the show and we can move down to our 101 price target. But this whole sort of move up through here is kind of expected. I don't think this is a back up to the top over here. Look, DXY can run incredibly hard. You know what I mean? And it can take a while to turn it around. As you can see, it took a while to turn around here. I mean, this is from, you know, what's the start of March, depending where you want to call, say it turned around. But say when it broke through here, there's 3 weeks to turn this thing around, which actually in DXY terms isn't the longest thing in the world. But point is that this thing won't turn on a dime. I think we've probably got a chance of moving up, as I said a moment ago, with that confluence up to this sort of level over here, this 105.40 on a sort of upside move. Once we start to get up around here, I'm going to be starting probably to maybe to sort of position myself for some longs. Some dollar short positions. But I think there's still a little bit of a squeeze, given particularly sort of how much work it had to do to get through this zone. It worked to get through here. It worked to get through here. This is what we were saying. This is where the sellers were. This is where the sellers were, and it was tough. It was tough to get through this level. I thought it would have been a little bit easier to cruise through, but obviously, bang, and it's moved up. So it's done all this work to get through this level, time and time and time and time again. Is it going to just sort of go and plop down here? Probably not. Like, you know what I mean? It's worked hard. It's proven that sort of even if you sell it down, they're going to buy it up. Sell it down, they're going to buy it up. It's pushed through. I would expect this to sort of continue. 104.75 was the price target from this measured move, as I've said a number of times. You can see the depth here equals the depth there. I would still say this has probably got more in it. I'd probably be looking up around that mid 105s. And I've seen a lot of calls for 104.90, 105, this kind of area. I think there's a chance that sort of like if there's a lot of people looking at that, there's probably a good chance to sort of squeeze them as well. Hit the first things. But again, this is a perfect example of the kind of trade where you don't need to be the first into the trade, because it's not going to fall over in one session and go straight down like this. Look, it could if you get some sort of drastic news, but given 90% of the times that DXY turns around, it doesn't turn around like that. So I think there's plenty of time to sort of position itself on the other side of this one. All right, move along. We've got gold, and gold is really trying to hang on there. Look, I am sort of looking down to these levels. Obviously, this is a bit of a sliding scale as it sort of comes up to this. So we're starting to get more of a sort of confluence into this area here. Move all these little price target things along here. See what happens if it bounces back over here. I mean, where's this going to come? It's going to come from something like here. But this is going to be an interesting sort of area, in my opinion. I think sort of this 80, because we've got quite a confluence of things should this sort of come over here. I mean, this is starting to look like it might sort of be a bit more of a confluence of area. But should this sort of come down, this is the price target, well, first price target, I should say, of 29.80. We've got horizontal over here. We've got rising support coming up through here, just after the 38% of this move as well. So it's still in a bullish sort of momentum. So I think we're definitely going to see some reaction from this area here. As to whether this is coming back here and that's bang enough for it to come up here, I'm probably more in the camp that we might actually go through. I think that sort of certainly I think the risk is more to coming downside and squeezing a bit of this profit, taking a bit of the fluff off the top of this whole move. And certainly if you can get back down under here, I think 50 was the next one. So let's just put this along here because I think 45 was the next one, and then this must be that retest of those levels up here. I've been touting this a little bit because I think sort of like, there's a lot of structure here that sort of, you got your overshoots, come down here, we've got a bit of a range, bang, a bit of a range. So it's obviously not sort of, we're not seeing this kind of stuff, this sort of complete wipe out, like, go back to, when was it? Yeah, October or something here. These kind of bam, 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 bam. I mean, look, this goes to show what gold can do. I mean, this was a bit of an extreme example, but, it's not the first time the gold sold off like this. There's technically that's 9%, $250 from up here. So, I mean, where does that take us? Should we have the same for, and this is more just not wishful thinking, but, that takes you all the way back down to, that's a 250. So that's not even the same percentage move. That's the same dollar size move. That was 9%. So 9% takes you back to a, that's very interesting actually. So this move here, percentage-wise, is the same as this pullback through here. 9% for that pullback. 9% from a pullback from the highs takes you back to getting this big retest down here, 2780. I mean, it's hard to sort of get sort of bearish on gold because it's just such a monster. Um, and I certainly don't think we're going to get something as quick as this, should this even come. But, this could be an area in which we could sort of see things come back. I mean, it never retested this. It did a little retest here, but, never got that bigger one. And if we do have this as a bit of a wedge with a sort of overshoot up the top over here, you can't really see because my charts are so messy, but, if we saw this as a bit of a pullback down here, you got the 61% of this move through from December. 61% is around there. I guess you could say that's the I don't see what this one is actually. The 161 retracement of the last leg up. You've got horizontals. I don't know. Look, it's a long shot, and there's a lot of levels to get through before you get here. So anyway, this is just sort of like more sort of planning for what potentially could happen based on what we have sort of seen previously. So I've already got this one marked out for this zone down here. So different price, different time frame. Anyway, whatever. I'm getting distracted. That's just an interesting sort of outlook for it all. So if we zoom in to something that's actually sort of usable through these sessions, we can see that's obviously just consolidating. It's pulled back, it's consolidating. Look, consolidation obviously, it favors the idea of the direction in which it's come in. This is just a little bit of a pullback through here. There's still risk that this thing comes up and retests for a big double top or something like this. I don't think we're necessarily going to get the continuation right now. As of course, I'm sort of more playing the short side of this. Should we get a close up around sort of the 30s, as I said yesterday? You can see it's tried to push up here a couple of times, and it just gets smacked down every time. So I think if you can get a candle that can do what these candles were unable to do, which is sort of like, a close at 31, 32 plus, then you can look back up to 45. I think unless you can get a close up around 31, 32, I think the pressure remains for a downside move to sort of continue. So pull back, consolidate, pull back. And then, of course, we see what happens when it comes in contact with this. What happens when it comes in contact with this sort of rising support coming through here. Certainly, I mean, it's incredibly bullish, so it's hard to be sort of like bearish on this thing. I've just got DXY opening up. It's a little bit of a gap down. So look, I mean, one sort of takeaway that I did notice actually, if you zoom in onto the 1 hour, it's coming down here. It's obviously got its little support. Buyers of finding it around here. This was just a headache to sort of trade through. And I tried to trade it a little bit, and then it was just like, look, whatever. Set the alerts either side of it and just let it do its thing. But the point is, even though DXY was really sort of pushing up, as we saw, it was breaking out to the top side on that squeeze, gold's still unable to break down. Now, gold and DXY can obviously sort of be inverse relationship typically, but they can definitely run together and they can just both ignore each other. And I think across the board, we've kind of seen correlations mostly out the window this year. I don't think it's been sort of the typical kind of sort of, oh, yep, this is moving up. I mean, look at what Aussie's doing with copper. Aussie's lagging at its lows, copper's ripping to all-time highs. Equity markets, I mean, well, they were at highs. Aussie's definitely wasn't at its highs. Gold and DXY, they're going in and out of correlation. So it's not a true reliable source. But the thing is, end of the day, it's if you've got all the strength coming into the US dollar, that the flow of capital's got to be coming from somewhere. It's definitely coming, as we know, obviously a lot from the euro, but a lot of it does get dragged from the metals market as well. That's why you have that sort of relationship between the two assets because the flow goes from one and goes into the other. They're not taking the flows from here and putting in US dollar. So how you can apply that, in my opinion, is sort of like that they're buying gold, they're not selling gold to buy US dollars. When they sell those US dollars, most likely they're going to be looking to buy gold, and that's when you'll get things jam up a little bit higher. So it's opening up a little bit stronger this morning. As I said, a little bit of a gap down with DXY. But I think really, till it's outside this little consolidation box, it's just going to be chop city kind of thing. I've got another chart actually, this one that I've been working with, which is a little bit cleaner. Whereas basically you can see, we had that little wedge up to the top, pulled back, and now we're just in a little triangle. So I think sort of like either side of these lots, we'll sort of see this going up, going down. Yeah, we'll see how this one sort of plays out. But I think certainly um, it's resilient. I'll give it that much. I mean, look, end of the day, it is like right up the very top. So, you know what I mean? It is up at the top of this big sort of rising resistance, top of this sort of channel. So a bit of a pullback is probably, healthy for it to do, but doesn't mean, as I said, same with DXY, doesn't mean it's going to drop in one day. And it also doesn't mean that it can't just go fly up and then sort of push back down. So it's just a little bit of a waiting game with this, but I am sort of looking more or less for downside moves before we get significant higher highs, like 3200s kind of thing. I do think we will hit 3200 and change. Who knows where the high is, but I do think that is where we will go this year. But again, I'm open to the idea of a significant sort of pullback to sort of shake things up a little bit prior to that. All right, so Aussie. So this is, I'm gonna have to start cleaning these charts a little bit more. This was the bounce yesterday. So this was exactly pretty much, well, not pretty much, it was exactly as I sort of said. You had this big rocketing move on the, what was that, the Tuesday night? Yeah, Tuesday night. Wasn't really any sort of catalyst for this. And these kind of moves where it's just bang straight up, they're kind of squeezes in my opinion. We had it sort of coming through yesterday. I caught the shorts sort of through this period and then through this period here. This is the one that I just stood there, just gobsmacked, sort of going, this can't keep going up, can't keep going up, can't keep going up. And it did. And it was, I mean, disregarding what was happening with the actual data because we had that weak CPI or cooler CPI, which should be Aussie dollar bearish, which is obviously, as we saw in the initial reaction, came down, undid this whole move into the 80s, actually got down to 78 or 77, 78 or something like this, and then they moved it up. And if you watched the video yesterday, that was exactly the call that I made. I caught the short side, did not enact the longs there, so that was a little bit frustrating, but I did take the trade through this little wedge that we had sort of forming just up through here. And this one sort of came in, I think, sort of, where was it? Yeah, this little part through here. So it was a little negative divergence. What time frame are we on here? Anyway, maybe it was, yeah, this point through here. So as you can see, here's the ND. There's a problem with having trading on different things. Anyway, there's your ND there. Now, typically, sort of like negative divergence are kind of more, the reaction is more in relation to the time frame that you're trading on. Obviously, if it's a negative divergence on a daily, it's going to last for longer. On a 15 minutes, you don't necessarily expect a full sort of turnaround. But this negative divergence here, so you've got your first high here, you got your high here, it's coming up here, pinnacle of this little triangle, and it just plop, and then dropped out. And it was just, and traded perfectly. And obviously, boom, right back down to the lows. And as you can see, we just sort of found support yet again, just down at these wick lows. So this is going to be a very crucial kind of little level for Aussie to hold if it wants to stay up above things. So you can see it's bounced here, bounced here. We do have another level of support just down underneath. So, you know, around those sort of 60s. As I said, 60s always seems to sort of line up a little bit with Aussie. So we can see if, what are the sellers doing here? They're kind of moving down. Let's make it one of these ones without an error. No, I don't really like this. I don't like broadening structures. To me, they seem a bit just you're making it fit. Look, what we can see is the sellers obviously moving down, clipping it, clipping it, clipping it. I think back up above, there you go, right on the money, back up above 99, so call it sort of, you know, back above 63. You could see this thing recover a little bit more, and we could just end up in a bit of a range through this period here. But given the fact that we've come down here, we launched off here, tested, launched off here again, tested. The more times we're going to sort of tap on this, the more times, the higher the likelihood, I should say, sorry, that we're going to break through. We've got a little bit of a sort of rising support, a bit of a triangle sort of forming through here as well. This is the measured move from that triangle. So the depths through here, let's put it on high time frame. So this sort of falling resistance here, tested out, obviously bang, failed, back into the bottom here. So it could just be a bit of an overshoot here, back to an overshoot over here. But I think sort of if this does sort of tend to sort of come out, depends where you want to put your triangle. To me, I mean, it would have been better if you had a bit more touches up here because it's quite a long way down over here. But, you know, you got the buyers are moving up, the sellers are moving down. They tried to break out, knocked on the nose. If this thing catches and sort of goes down under here, I am sort of looking down into these little buy zones, which I'm going to move these across and tighten them up a little bit. So first one being sort of this rising support, and then a little bit of an overshoot. And as I said, look, if DXY does get onto itself and it does sort of jam up towards those 105 levels, then certainly, you know, these levels I think are a good chance that we get a bit of a touch up, and I wouldn't mind sort of getting longs from down here. And this is why I kind of missed that move yesterday because I knew DXY was most likely going to jam up a little bit higher, which is, you know, what I've said I've been trading, and then with that weak cool CPI from Aussie, from the RBA, DXY about to squeeze higher. You know, that means US dollar is going to be pushing it down. RBA is going to be pushing it down. Yuan, which I'll get to in the moment, was pushing it down because the yuan sort of moved right up into that sell zone. So to me, that was the analysis. And yeah, I missed 50 points or whatever the hell it was, which is a sore point to miss for sure. But given those sort of factors, this is partly why I sort of shorted this as well, because DXY moving up, so the US dollar is going to be pushing it down. Yuan weakening, that's going to be pushing it down. And then make it smaller because the RBA is the tail end of stuff. Cooler CPI, that was going to be pushing it down. And as you can see, eventually it kicked into gear. But as US dollar is the bigger driver of all these sort of things, and this is what I say, that sort of like we can have data, homegrown data, and it can say one thing, and everyone can be like, okay, yep, it's it's hot CPI, cool CPI, whatever. If unless you get particularly DXY and US dollar as a broad sense, and obviously the China side stuff on board, this becomes slightly irrelevant. It's a smaller mover in the grand scheme of things than these two are. It adds to it. Certainly, if you get these all moving together, it can be boom. And this is why I think that there's got the potential right now to really sort of move to the downside because US dollar is about to squeeze higher. We'll see what the yuan does here. It is up into that sort of sell zone, which I'll cover in a second. And you got a weak CPI. So you got everything sort of for the makings of this thing breaking down lower. So we'll see how we go, see if we can hold some shorts. through this one, because this is the kind of lineup where we could sort of see things move down into 62, 62.40, 62.50, certainly down to sort of test these lows, 62, mid 62.50. So, another 30 points to the downside from here. The 4-hour RSI does also look like it wants to come down a little bit here as well. Like, as you can see, it's a very small, there's that negative D from the 15-minute, but as you can see, this push through here came up to the same level, albeit though small. The buying pressure was unable to get over 80, and it's definitely tipping down here a little bit more. So I wouldn't be surprised if this thing comes sort of crashing down a little bit. All right, so move along. We got silver. So silver, very buoyant, all things considered, and same with gold. It kind of just um, ignored what DXY was sort of doing. As you can see, it's just building itself a little bit of a flag here. So look, should this thing break and metals rip up, I mean, this would be your measured move for that. That's your measured move. Takes you right back up to 34.50s. Look, there's a bit of work to be done. You can see that obviously sort of like this little zone that we had drawn out here came in perfectly. 78% retracement. The horizontal, sellers were here. First time back, sellers are there again. So that's definitely the level you've got to beat. So let's just put this up over here, put an alert on it, and say just highs and flag measure move. Look, I kind of don't think that this is going to happen. I do think that gold's going to roll over, and I think it's going to take silver with it. But again, these are the kind of things you got to consider both sides of it. We had a big sort of breakout. That 32.70 call was just bang on the money. It has bounced back up here, but this is the thing at the moment. This is a very crucial kind of point for it, because what I sort of always cover, we got the three moves. We're moving up, we found resistance. Moving back, we found support. Support, same level as the previous resistance. This is all running to plan. 1, 2, 3. This is the crucial point, because this leg here needs to take out the highs. If this leg sort of fails to take out the highs, I mean, the other alternatives is a big double top, which then could lead to a range, or obviously a double top can obviously lead to a bit of a breakdown, measured move down there. We get to that when we get to that. But the alternative is that it just does this. And then, let's get this off. And this would be your lower high. So you've got your big breakout, you got your high, you're back, you found your support, second effort of the buyers, and then it comes in lower. So the sellers are moving down. They're moving them from selling at 34s, selling to 38, so 33.80. If this does happen, then it becomes this leg here. So this leg would then sort of be targeting this one over here to see if this can then continue and move down through there. So look, it's a crucial sort of point for it. Had I bought the analysis from Friday at 32.70, would feel a little bit more comfortable. I think at the moment it's, you want to see it really continue and power on. Look, if it breaks this little sort of flag area that we got here, if it breaks these highs through here, then I think that's a good indicator, and we could see this thing move up here, at least up to this price target. But it needs to prove itself over 34. Over 34, 34.45, I think is a reasonable sort of little price target. And that's your measured move price target just through here. And as I said, I am more in the idea that this thing will break lower, but you need to sort of respect the fact that even though DXY is ripping up, this thing's not budging. So if DXY peters out before this pulls back, then this is going to go to the highs over here. So it's kind of, if you know what sort of elastic movement is, That's pretty much what it is. It's where one thing's sort of moving in relation to another, but only in one direction. Good example is sort of like petrol prices when there's a bombing in Yemen or whatever, and petrol prices will fly up here. But then, sort of when the world oil prices are coming down, we're not seeing that same one-to-one ratio where relationship where petrol prices come down straight away. It's like an elastic band, stretches one way and then very slowly moves back in the other direction. So look, if this thing goes back under 33.40, again, look, this is kind of a level that could expect a reaction from at that 33.30. Certainly, you'd need to hold this 33.30 level. You fail underneath 33.30, I'm going to call this a big fail move here. Then you're targeting 32.80, and then a potential sort of pullback deeper down towards 32. But for now, it's just consolidating, thinking about what it's going to do. All right, let's move on. Copper. So this is a big explosion overnight. This was 2 seconds. All right, back. Yeah, so copper. This was just an explosion yesterday. This was if we get onto a low time frame, you can see the extent of it. And this is just like bang. This is basically what capitulation is really. I mean, there's no reason other than this is all-time highs. It was just like there must have been a big sort of lot of stops and then people that just got absolutely annihilated, squeezed out of their positions here, and it just went. I mean, this is a 5-minute candle, 5-minute time frame, and this thing moved 2.4% on one 5-minute candle, 10 minutes, 2.78%. That's a massive, massive move, and that's just people sort of getting liquidated in their positions, basically. So, yeah, look, generally when you see these sort of things, these are big sort of like, tops, bottom kind of moves, and you sort of see them, okay, we've found all those people, they've ripped them all out. Subsequent moves for this generally are to see things come back to the other side. Other examples of this kind of thing, if we look quickly, just to sort of show when these kind of times happen. Whoops. If we remember, where was it? August. I'm better on this thing here. This kind of move here, as you can see. End of the trend, big massive move down, shot back up, and look at the resulting action coming back up the top like this over here. If you look at, of course, another good example of it is gold. This one here, 2079. Yeah, so this was that big move that we had Monday morning, and it just went shot straight up, took out a whole bunch of people, and bang, resulting action coming back down. This on a daily here. So look, I would expect there's probably to be at least a medium-term top for copper, just given that this is generally how things happen, where they sort of do these very sharp, fast capitulation moves. Where's copper gone? So back onto copper here, and as you can see, this is very much, out the highs over here, closed up on the highs, and then it just rocketed out the top over here. So look, it's opening up and it's got a little bit of a push up over here, but certainly if you take out yesterday's lows, where we've got this little alert set up here, I could see this thing sort of cooling off and coming back down here. For the most part of this, I mean, I was through the trade here, but this last leg here, I've just been sitting, waiting, and I missed the whole thing. But that's okay, that's fine. You don't lose money for missing the trade. It's just a little bit frustrating, obviously, when you chart it every day. But what I'm sort of thinking with this is that this is very much looking like it could be setting up for a little bit of a top. We could be seeing a bit of a pullback. Maybe I'm wishful thinking to think that we're going to get back down over here, but I will still sit and sit on my hands from that just for now. We're very screaming overbought. We've got this little capitulation top. You take out this alert down here, I think this could see a little bit of a push down. And that's not going to bode well for Aussie. And I guess it's pretty much exactly like I was sort of saying before with that elastic kind of thing. I think sort of like, the fact that copper's been doing well, Aussie should have been doing very well as well. It wasn't. If this pulls back, I think they're going to use that as an excuse to sell Aussie as well. And Aussie is already on its lows. So if you're applying that pressure to Aussie, like if copper prices are moving up and it's not, and like that's been what's been supporting Aussie from getting hit even harder. If this is the little pillar that's holding Aussie up off the lows, and then you take this pillar out, well, what's going to happen to Aussie? It's going to fall down. So that's why I'm still sort of looking. Another reason why I'm sort of looking short on Aussie at the moment. We are seeing metals open up and push up just a little bit stronger there. Um, so yeah, look, it's certainly very bullish as we know, but it doesn't mean you can't see these reversals. And I think certainly if we take out yesterday's low, that'll be a bit of a signal, and we'll probably see a little bit of deeper cooling sort of through that zone there. Certainly all-time highs is very very it's not a bearish thing, put it that way. All right, and finally finish off with China because this has come right up into that top zone where we kind of sort of thought, look, sell's going to happen here. So if you've been watching what I do, this is the little sell zone that I've been sort of pointing out. This is what we've been targeting. From the bottom down here, I was open to the idea that this thing could squeeze. It has. This is what FX trading is. It's like, oh, it looks so perfect to go boom, boom, boom. And this is what that plan was. This one here is the little boom, 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 fall off the floor. I do think this is still the move. Move this one along. I think this is coming down to test these lower sort of 7 levels, but up into the sell zone first potentially. And look, if DXY moves a little bit higher, this could also grind up a little bit higher. You could be looking back up over to these levels over here. I don't think necessarily we're going to get there, but certainly if you get back above 728, 730 is a level that you're probably looking to move. So this is the move if we get up over here, and then we sort of look to move this down. But certainly it's this first sell zone is getting a touch up here. We're seeing a little bit of a reaction. Overnight it got a little sell down, grinded. It's way back up into this zone over here. So we're in the middle of that sell zone at the moment. So this is something that could help Aussie. But you know what I mean? As I said, if you get this moving up higher, that's not going to bode well for Aussie. If we see copper selling off, that's not going to bode well for Aussie. And this is those 3 ticks that I was talking about, 3 arrows I was talking about with the Aussie analysis before. China is that middle part of it. And with this moving up here, a weakening one, that is not strong for Aussie. And we're seeing that very much play out at the moment. So, if we get copper sort of rolling over as well, and this continuing to grind up higher, DXY moving up higher, obviously the broad sort of sense of US dollar again around the market, that's all going to sort of be weighing on Aussie to sort of be pushed down a little bit lower. Doesn't mean that sort of like, it's game over for Aussie. I think there's certainly, there's enough going on where US dollar will sell off eventually. I think China is on a sort of bit of a comeback, but doesn't mean they can't squeeze people out first and then see the actual move. That's the big sort of ticket area you need to get through, but it doesn't mean that you can't do these kind of moves before you do get back down over there. All right, and I think that's pretty much it for the charts. Have a little look at gold-silver ratio, see what that seems to be doing at the moment. This is interesting because it's been in a 3-month consolidation, really. The buyers are obviously very sort of keen at 87, 88 kind of levels. And then obviously every time it comes up into this top zone over here, around that 91.50 and change, 91.50, 92, it sells back down. So look, I think this is going to see a big break once it happens. We break out to the top side, we're going to see gold and silver take a bath. We come down to the bottom side here. It's kind of somewhat limited by this rising support. So the longer that it consolidates through here, you can expect a fairly decent reaction, but I think it's going to be somewhat short-lived, at least for the initial move, because I think any move out of the bottom here is going to be coming into this sort of rising support pretty quickly. And that sort of puts it in the idea that you could see a bit of a ascending triangle, which puts the squeeze and the potential risk for a topside move out along here to say 95. That's a better sort of reward to go out this side than it would be to just come out here, where you will see a reaction. It doesn't mean it's going to hold. Not everything has to hold. But, if it does come out here, you will see not a great sort of level of return from this point through here. So maybe a last hurrah for gold and silver to come up to the highs, reversal, and then move up to the top side over there with those metals sort of having a bit of a deeper sort of correction. All right, that's it from me.